Hey everybody, welcome back to another live show. It seems like it's been forever since I've done one of these things. Hopefully I remember how all this works. I do remember that I normally ask you for a thumbs up, so if you can hear and see me so I know everything's working. I already see some great questions that I'll cover, um, but would appreciate a thought. Oh, David P., thanks for the thumbs up. Appreciate it. Um, I thought I would start tonight just very briefly talking about my thoughts on Apple, which I've owned since 2013. I actually sold some of it. And by the way, if you're new, you've never been to a live show, I do this little topic to begin with, just be a couple of minutes, and you can ask questions. You can ask anything you want in the chat, and you can just put at Rob Berger because it helps me see them, as opposed to chatting with other people that are watching, which, of course, I think is where the fun actually is in this show, from what I can tell. But in any event, I actually sold, I would say, about 20% of my Apple stock 10 days ago, I think, something like that. And I'm going to make some charitable contributions to a donor advised fund for this year and next. I'm going to do it all this week, probably. And then I might sell a little bit more. I'm not going to sell all that we have, but it was creeping up. I think it was like 17% of our investments. That's just too much. And I want to show you my thinking on this. I actually want to talk a little bit too about Alphabet, because Berkshire Hathaway just disclosed that it purchased some shares of Alphabet. But if we, I'll show you this on the screen. This is one of the tools that I use. I don't actually talk about this tool very much, but it's called Stock Rover. And one of the things it will do, and I'm sure other tools do this, but shows you, in this case, we're looking at the history of Apple's price to earnings. It goes back to, they've got data going back to 2013, which is actually perfect for me because I've purchased Apple shares in three times. One was in 2013. And you can see here, the PE at that time was around 10. And then I purchased at the end of 2018. And then a month later, like the beginning of 2019. And the PE at that point was around 13. And as you can see, it kind of just skyrocketed. It came down. This was in the end of 22, it was down to about 21. But it's currently at what, 36, roughly. And as I was just thinking through our investments and our allocation and how much we have to Apple and trying to simplify the portfolio, I thought, I started at the 10, in between 10 and 13. It's grown substantially since then. Of course, its earnings have grown substantially as well. Exactly what am I hoping to accomplish with this investment long term? I just don't see the multiples expanding significantly over a long period of time, not when it's at 36. And it occurred to me that we've, at least I'll speak for myself, I've almost gotten complacent in terms of this current market valuation. If you look at the big companies, NVIDIA, Alphabet, Microsoft, Tesla, the PEs are pretty high. Alphabet's actually probably one of the lowest. I think it's in the high 20s. But it's almost as if I've just become accustomed to that. I mean, the reality is, if you look at history, these companies, yes, they're growth companies and they're making money hand over fist, but would a PE in the low 20s be outrageous? I don't think so. I mean, it certainly seems that way at the moment, given the valuations that we have. But do we really think a 36 is like the new norm? I don't think so. And the point wasn't that I think it's going to go down tomorrow. I have no idea what it's going to do, particularly in the short term. And I think Apple's still a great company. I'm not going to sell all of our shares, but it just struck me as, look, this is probably a good time to make some adjustments to bring down our allocation to Apple stock, which of course is not only through direct shares of Apple, it's also through the shares we own of Berkshire, because it owns a lot of Apple stock, and then through the various mutual funds that we own. And so, yeah, it just seemed like a good opportunity to trim that. And I won't change our overall asset allocation. So it came out of stocks, so it'll go back into stocks, but just through a fund rather than an individual stock. And that's my plan. That's what I've already done some of it. I'm going to do more of it this week. And I'm curious. I'm going to ask a quick question of you guys, and then I'll get to your questions. Have you, I'll say, traded individual stocks this year? And I'll just say, yes, I've bought. Yes, I've sold. I've not traded at all. And then I'll have another option for I don't own individual stocks. I will say on the whole Berkshire Hathaway buying Alphabet, I was really, really stunned at that. And I'll be honest, it worries me a little for Berkshire. I just don't believe for a minute that it's Warren Buffett. But of course, who knows? And I don't know how the internal working, of the company at this point. Obviously, he's coming to the end of his tenure. It just, to me, it's totally, totally different than their purchase of Apple. I think they bought it, was it 2016? Something like that. Because Apple's really a consumer products company. It's both Apple and Google, are in the tech sector, but they're totally different companies. And, Google is, of course, knee deep in the AI rush that we're in. Apple is not certainly not from a capital expenditure perspective. It's not investing nearly the kind of money that a Microsoft is, or Google or Amazon. And in some ways, I think they're smart to handle that. I guess they've just made the decision. We don't need to develop our own LLM. And in fact, they made a deal with Alphabet, Gemini, and then maybe they'll make other deals. I don't know. But they're just really two totally different companies, and it just strikes me as that Alphabet is the kind of company that Warren Buffett would say he can't value it. There's just too much uncertainty. Of course, I could be wrong, but I was just really shocked at that purchase. Obviously, Google's done great this year. I think it's up like 50%. Of course, it was up today because of the announcement, but year to date, let's see here. I want to say it's up 50%. Goog. Yeah, 50%, 49.82 year to date. So it's done quite well. I was really surprised at that. Anyway, what do I know? So that's what I'm doing with my Apple stock. I'm not selling it all. We'll probably get down to about 7.5% is my guess, roughly, of our portfolio will still be in Apple. Again, some direct, some through Berkshire, and then some through the funds. And I'm okay with that. So that's it. All right. Let's see here. Let's get to the important stuff now, your questions. Let's see. Unfortunately, I know there were questions at the top that I can't get to now. I don't know why it does that. All right. So this is one question that I can't show on the screen, but I'll read it. It's from Daniel. Do you have any general guidelines that you use for timing the buying and selling of shares of ETFs, such as VTI or some other fund, or a mutual fund like VTSAX, timing like day of week, time of day? Well, I do actually, not so much day of the week. First of all, the timing on a mutual fund doesn't really matter, because regardless of when I initiate say a buy order, it's not going to go through until after the close of the market, because they have to determine the price, the net asset value of everything that fund owns. So they wait until the market closes and then execute the purchase or the sale. So I don't know that a day of week, I just can't, I don't see that matters. On an ETF, I'll often not trade at the first half hour or last half hour of the day. What I'm looking for is whether there's a premium or discount to net asset value. For the kind of funds I would buy, like a VTI, it's so highly traded that the difference is going to be, very, very small. But at the start or end of a trading day, it can get off kilter a bit. I don't know in the case of a big fund like a VTI or VXUS, if that's really true, but that's what I'm looking at. And I'll often just not trade it in the first or last half hour, but I don't, beyond that, I don't. And by the way, at the moment, the only ETF I own, that's not true. I own some VXUS, I own some SCHD. I actually did a video about a week ago with an update of my portfolio, but I haven't published it yet. I'm going to publish it on Wednesday. It's funny. I was thinking about that for tonight, and I was saying, I can't remember what I said about my Apple stock in that video. Yeah, I guess we'll both find out. All right. Yeah, I don't think there's any other, I don't have any other thoughts on like time of day or day of the week. I suppose if you were trading something that's thinly traded, there's not a lot of volume, you might have to, think about that and the premium or discount. But I don't trade anything like that, so I've just never had to worry about that. Okay. Rob is practicing risk control. In a way, I guess that's true. Jonathan, good to have you here. I guess that means your investment club is not meeting tonight. Well, it's so good to have Jonathan here. I'm not good with thumbs. I always give you the finger instead. That's hurtful. Okay. I am happy to report that apparently YouTube, TV, and Disney have, solved their differences, at least for now. So I guess I'll be able to watch Monday Night Football. And I think the Manning cast is on tonight. I think. I don't even know who's playing. All right. So I'll bring up Jonathan again. Think of my buddy with 400,000 shares of Apple. Well, I mean, at some point, does it matter? I mean, I don't, what's it trading at? It's trading at 285. No, that's Google. It's in the twos though, anyway, isn't it? Let's see. Yeah, 267. So if you own 400,000 shares, I could do the math in my head maybe, but I'm tired. 267, that's $106 million. So, I mean, I guess it depends on how much of that he's spending every year, but, it's kind of like, at that point, I don't know. It doesn't matter. I mean, Apple is a phenomenal company. It's not, although still 80%, I don't know if I'd be comfortable with that. But he's obviously, done okay for himself. So there's that. So Josh wants to know, we're in a similar situation. How do you think about the trade-off between the capital gains on your Apple sale and the Roth conversion space it takes up in your tax bracket? Well, it's a good question. Every situation is different. I think about it not only in relation to possible Roth conversions, but also timing. So like, should I do it now? Maybe I should wait next year. What do the taxes look like? How confidently can I predict what my tax situation is going to be next year? And without going into all the details, I'll say that generally I've concluded that the tax consequences for us will be the same whether we do it this year, next year, probably the year after, and it won't change any Roth conversion analysis for us. So it just hasn't affected that for us. But it could. I mean, in a different set of circumstances, it would, and I would consider that. Although I often have to remind myself that in deciding when to sell, I don't think taxes should be the primary consideration. It's important. You got to factor it in, but I don't think that should be the primary consideration. Yeah. So this question from Russell, no, I didn't. The sale of Apple shares were shares that I wanted to sell. the parts that I'm donating, I'll donate the shares. I won't sell them, which is an important point. So I'll donate the shares because I'll donate them to a donor advised fund, and then we can take the deduction on that the value at the day we do the donation, and we don't have to recognize any gains. So yeah, that's how we do the charitable contributions. And they've really, in fact, Apple stock has funded our charitable giving for a decade, probably. I mean, we haven't given cash to a charity in a long time. All right. I don't know if this is for me, but I'm going to answer. Will you be following Warren Buffett and buy Google or Alphabet? I will not. No. You know, by all accounts, it's doing great. You know, there was some concern that with AI, I mean, Google, you know, it makes the lion's share of its money through Google Ads. It's, you know, it's advertising. And there was some concern that AI would disrupt that. So far, that hasn't happened. And of course, Google has other things. Like, I'm curious, you know, this whole autonomous driving thing. I mean, it seems to me that Waymo is far out ahead of Tesla. It seems from the miles driven and the tests, they're now authorized or will be here soon to test on the freeways in, I think, 3 cities. You know, how much all of this will generate in revenue and profit, you know, over the next whatever 10 or 20 years, I don't know. It seems to me like it should be a pretty good investment. So there's that, of course, but no, I at this point I'm not really gung ho to invest in individual stocks, and certainly not right now in this market. My best investments were when it was like shooting fish in a barrel. You know, when valuations are just really low. So, yeah. All right. Let's see here. Oh, let's look at the poll. So 39% of you don't own individual stocks. 32% of you have bought. Wow, that kind of surprises me. More have bought. 31% now, it went down, have bought. 14% have sold, and 17% have just done neither. I guess you own individual stocks, but you haven't done that. Haven't bought or sold. I haven't sold any of my Berkshire stock. I don't plan to. Anyway, I'll keep the poll going for a little bit. Ted says about Apple, it's mature, 15% organic growth year over year is over. I think much of its growth the past few years is from share buybacks. He sold a year and a half ago. You know, it's it'll be interesting to see how its iPhones, is it 17 they're calling it? Eventually they're going to get to the years. What that will do. Are they going to get into robotics? There's some talk about that. I guess they're going to have a folding phone maybe next year. I think it can still grow, and its profit margins are still incredible. But what if it's a 25 PE? That would not be, to me, outrageously low, right? Again, it doesn't mean it's going to go down tomorrow, but just seemed to me like a good time to reduce the allocation. All right. I guess now there's talk about whether there's a delay in the feed. There could be. I don't know. All right. Noreen wants to know if I have new glasses. So these are not new. I've had prescription glasses for 20 years. I had progressives because I'm nearsighted in one eye, farsighted in another, but I don't need them. I don't need them to pass the driver's, eye exam for the license. I can read things fine. Yeah, I can read fine. The reason I started wearing my glasses, though, was because I was concerned that even though I seem to read fine, I spent a lot of time looking at computers, monitors, iPad. And I was worried that even without realizing it, it was, the trying to focus was just causing some eye strain. And I wanted to sort of test wearing glasses. And I've kind of just kept with it. This is a little difficult because I've got a monitor here that's an arm's length away. And I've got a monitor here that's just a little bit further than an arm's length away. And it's almost as if they're a little too far for reading glasses, but too close for the other pair of glasses that I have that are for distance, because these are not progressives. Like if I were here, it's like perfect. So I do have an eye appointment just for a regular checkup, and I am going to get progressives. But see, I don't know how those work. Like, are progressives, do they work well for computers? Like, am I going to be like this? I don't want that. I don't know. First world problems. Evan wants to know if I have any sort of methodology for how I pick stocks. Not really. I haven't owned a lot of different stocks over the years. I mean, I have a few others that I sold a while ago, a few banks. I owned Deere and Company at one point. I owned a few small shares of Tesla and NVIDIA and Oracle, which is kind of ridiculous, to be honest, but some of it's part of the credit card rewards that I invest. But it's just a few shares. Really, the only stocks of importance to our portfolio are Apple and Berkshire. I bought Berkshire years ago because I wanted to go to the annual meeting. I bought Apple because I thought it was just I thought it was a steal. When I bought it, I'm like, I don't know what. When I bought it in 2013, something happened. They reported something in a quarter and the market got spooked. Back then, it was trading at like 700. This is, it's been split several times since then, but it was trading at like 700 and it dropped to like 395. And you saw like a PE of 10. I'm like, I don't know what the market is thinking. So I bought some. I'd buy more again. If anyone wants to sell it to me at a PE of 10, I'll buy some more. Okay. Juan wants to know what book to read to start investing wisely. Well, there are a lot of good books. I'm just turning around to see what I've got behind me. I have another shelf over there. I could bring some up on the computer and I can show it to you this way. I'll tell you one of the first books I ever read that kind of got me thinking that index funds was the way to go was this book by Rick Ferry, all about asset allocation. And I think it's as good today. I think he's updated it a few times, but I would definitely recommend this book. What else? You could do a simple one by the Bogleheads. Is this one. The Bogleheads Guide to 3-Fund Portfolio. It's not a long book. It's an easy read. I think this is a good one. Yeah, I think those are two good books to start with. So Kat wants to know, what other modifications will you be making before the end of the year? Roth conversions, change in asset allocation. So I won't be changing our asset allocation. We tend to this time of year hold a little more cash because of taxes that are coming due. And what I tend to do is hold on to that cash. It's usually just for a couple of months until I know for certain what the tax picture is going to be, and then can invest if we have any extra. But it would still be with the same sort of asset allocation in mind. I will say that I'll probably, if you imagine me doing that, we're in November, let's say I do it in March, I would probably add to our international index fund and our small cap index fund assuming the market's as it is today. I wouldn't add it to our total U.S. stock fund because of valuations and because I just generally think we need more international exposure. So it's kind of just the way we rebalance in a taxable account. We don't buy and sell, but I'll direct new investments to whichever fund I think needs to have more in it. But beyond that, no changes in asset allocation. In terms of Roth conversions, I haven't made a final decision, but at least at the moment, I'm thinking not this year, and we might revisit that next year. But I'll make, I guess, a final decision in December. All right, which I think the poll hasn't changed much, about the same, but I'm going to ask you guys, end of year portfolio changes. That's the question. No, not doing anything. Will rebalance. What else can I say? I'll say plan Roth conversions, which is kind of a portfolio change in a way, right? Particularly, because of the taxes that have to be paid. I'll just leave it there. 3 choices. I'm sure there are other options, but Alex wants to know if I'll invite Ben Felix on the live show in the future. Yeah, why not? I think he's great. I've never met him, but I mean, I've watched a few of his videos. What are your thoughts on AI bubble discussion and market volatility of late? This is from Jay. It's hard for me to determine if we're in a bubble. I guess, first of all, what is a bubble, right? Because I think when most people ask that question, they don't want to know if we're in a bubble. What they really want to know is the market going to crash? That's what they want to know. But I mean, like if someone knew all and they said, yeah, we're in an AI bubble, but by the way, it's going to last for 9 years. I think we'd all be, okay, good for us. Let's go. What we really want to know is, when's the market going to crash? And I have no earthly idea. And if it does crash, if tomorrow it's down 20%, people will say, yep, we were in an AI bubble. But if it kind of stays where it is for the next 6 months, I don't know. Are we in an AI bubble? Certainly the AI companies are committing to a level of capital expenditures, CapEx, that is unprecedented. And it's not even clear how they can afford it, at least some of the companies, ChatGPT, OpenAI. I mean, the numbers are just crazy. And there's no indication at the moment that there will be down the line revenue that will support that level of spending. I think one can imagine AI, it's not hard to sort of think through that AI could be incorporated in just about everything that we do, certainly in business. And I think we've probably only scratched the surface of the things that it can do. And if we get to a point where we make a lot of progress in the field of robotics, I mean, I think just everything goes crazy at that point. I really do. But when, I don't know, timing, what's going to happen between now and then. I mean, it's, anyone's guess. So I've read a ton of articles about, are we in an AI bubble or not? And I've come away from it all concluding that I don't know if we are or not. I don't know. I think, from an investment perspective, I think it's important to be able to say, I don't know. It's important to know our limits. Maybe you guys know, maybe some of you are in the industry, you have a better sense of it than I do. I've read a lot about it, but I'm not in the AI industry. I will say I did try something recently, and by recently, I mean earlier today. that I'll show you with AI. I thought it was fascinating. Let's see here. Give me just a second. I think it's this one. I'll show you this. So this is Morningstar Investor. I subscribe to this. I'm not a huge fan of Morningstar Investor. By the way, they're an affiliate, but I don't talk a lot about them because I just don't. The problem with this tool. So this is a test portfolio that I just manually entered 1,000 shares of the Vanguard Target Retirement Income Fund. You can link accounts, but if you link accounts, it won't show you your performance because it says to show performance, you have to manually enter every single transaction. Well, who wants to do that? I mean, maybe some of you do. And if you do, actually, I think Portfolio Investor is probably a pretty good tool. But most people don't. I don't anyway. But that's not what I want to show you. Let me pull up a screen here first. The one feature it offers that I really like is this right here. They call it stock intersection. And so the only fund here is this Vanguard Target Retirement Income Fund. It's a balanced fund. It's got bonds, stocks, international, US, but you can drill down and you can see, for example, if you owned 1,000 shares of this, which comes out to about 14 grand, $153 roughly of that 14,000 is invested in Apple. Right now, of course, you might have a more complex portfolio with a lot of different ETFs, mutual funds, whatever, and it would do the same thing. It'd pull all those funds together. It would show you the amount you have invested in whatever company, and it would have more than one fund listed here. If you let's say you also owned VTI and whatever. So why am I showing you that? Well, I started thinking, can I ask the right question from AI and get the same answer, $153? Well, I will show you. If I can find it. Maybe. I just did it today. Why can't I find the chat? Let's see. I know it's in here. I'll search. Oops. That's interesting. Why is it not finding it? I also did this with Claude. Oh, now it wants me to sign in. Come on. Let's see if this will work. Here we go. I'll show you with Claude. So bear with me. So I asked this question. I said, I own 1,000 shares of VTINX. How much do I have invested in Apple? So it starts doing all this stuff. It's got all this research it's looking at. It's looking at more research, blah, 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 blah. It says the current price. This was, I think, this morning maybe. Oh, no, this was as of, yeah, this was been Friday's close. And you get down to it, it says $154. And this is 153.38. So it basically got the right answer. That really impressed me. I don't know. Maybe I'm easily impressed. I'm not sure. But it occurred to me, I might not need Morningstar portfolio to see what my exposure is to Apple. I can just put in all of the funds that I own and the amount of shares that could possibly own Apple, and it'll tell me. I don't know. I thought that was pretty good. I did it in ChatGPT as well, but I couldn't. I don't know why I can't find it. All right. Mike wants me to ask you all if you were voting on whether to cut the Fed fund rate, would you vote to cut it or not? I don't think I would. So 50% of you are not doing anything for the rest of the year. 29% will rebalance. 22 plan a Roth conversion. That seems like a lot to me. 22%. That's pretty good. That's pretty good. I'll do a poll. I'll say, will the Fed cut the rate is it December, the next one? Yes. No. And then I'll say you could also vote I hope it does, and I hope it doesn't. All right. Andy wants to know who I usually play chess with at the side table. So, well, today it was with my granddaughter, which is why the pieces look like they do, because basically it involved knocking them over and then standing them back up. And it was a lot of fun. And she would be over there and I would be here, and then she would yell switch, and she would run around and I would run around. We'd switch sides, knock pieces over, switch, and we'd run back around. We did that a good dozen times. I haven't really started using this that much. Oh, there goes a piece. But if I'm studying chess and I want to set something up on a board, which I actually had a position set up here. But yeah, I'll show you the position that I was studying. If you're new and you're like, Rob, we're going to look at chess, yeah, just for a second. So this was the position I was looking at. This is the Italian. That's the name of the opening. And it's where black plays d6 here and does this situation and checks me. And I go here, and then, oops, we're going to do something different. Black does this. No, hang on. We'll do this, and I castle. And then they take my knight, and then they think they've won a pawn. I had this position set up. I actually went here, pinning the knight to the king. And in that position right there, white to move. My bishop's being attacked. What's the best move? All right. I'll let you think about that. You should have the position in your mind now. Here it is, but you should remember it. What's the best move? Okay. Cowboys and Raiders are playing tonight. Okay. I think Ohio State, well, we'll see. We can't seem to beat Michigan. We got Rutgers next week, but we might be playing Indiana for the Big Ten championship. Boy, Indiana looks good. It's like, has that ever happened before? I don't think so. I don't know. Noreen, the chess table is not new. It's just never been in the camera, and you haven't been able to see it. It was over there. This table, and it's actually a chess table. I just have a mat on top of it because, my wife's uncle, who passed away 25 years ago or more, he built this. He was a furniture maker. He built this. Unfortunately, the chess table that's built, the chessboard that's built into the table, the squares are 2 inches square. And that's not regulation. It's 2 1/4, which doesn't seem like a big deal, but it really is. So I have to put a mat over it, or it just drives me crazy. Boy, these are personal questions. What kind of watch? This is just an Apple Watch, the Ultra. The big one, so I can see it. And it's not even the new one. I don't know. It's a couple of years old. All right. Did you guys come up with an answer to the puzzle? So the interesting thing is something like this. You take the knight with the rook. Check. Because in this position, that's a very black is basically losing. The combination of this bishop and this knight and the queen. So even if you think, well, I'll just go to safety, This is crushing. In fact, we can turn the engine on. It's, white's up the equivalent of over 4 pawns. There's really no easy. You're basically lost at this point. In fact, it's so bad that the computer is just suggesting that black take the knight. That's how bad it is. Anyway, that was the position I was looking at before my granddaughter and I played chess today. Then we messed up that position. That's okay. She knows the name of all the pieces, for the most part, how they move. All right. Dan wants to know how E-Trade can afford to pay him $5,000 for rolling his 401k over. Dan, I'm mystified by that as well. The only thing I can conclude, because Schwab will do something similar, Fidelity will, is that while they might not make money off of you, they do make money off of enough people that the bonuses that they're willing to pay work out for them. Yeah. I mean, I know people that, get in there and then I don't know about E-Trade, but they'll sign up for the direct indexing where they're charging you. It's not a ton, 40 basis points, but you kind of get stuck because before you know it, you're holding 200 or 300 different stocks from all of the buying and selling, and you're not going to manage that yourself. Or they could sell you other products. But yeah, and I've kind of done the same thing, not with E-Trade. Yeah, and they don't make any money off of me. So Dana wants to know my thoughts on opening a donor-advised fund. It's what DAF is, to help minimize the tax burden after realizing a $125,000 long-term gain from the sale in a brokerage account. Well, I think donor-advised funds are an excellent way to contribute to charity in a tax-advantaged way, because you can donate, as I do, appreciated stock. Could be stock, could be shares of an ETF or whatever. You don't have to recognize the gain. So if you say you've bought a fund for 5,000 and it's now worth 10, and you donate that, you're going to get a tax deduction of 10,000, and you're not going to have to recognize that 5,000 in gains. Now, if you sold it first, you'd have to recognize the gain, and so it doesn't make sense to do that. So I think donor advised fund, we've used one for, I don't know, 15 years maybe. I think they're a great way to contribute. I assume we'll continue to use one until we get to RMD age, and then probably just do qualified charitable distributions out of an IRA is my hunch. But yeah, I think they're a great tool to use. I mean, the primary motivation, I think it makes sense if it's for charitable contributions. If you're, I guess, even if your only goal for now was to deal with that gain, but you'd still want to, from a tax perspective, if you didn't have any interest in contributing to a charitable cause, then I don't think it makes sense, because you're going to end up with less money, right? I mean, it saves you on taxes, but you're still out, right? I mean, if you've got $100,000, yeah, it gives you a deduction, but you'd be better off selling it. Yeah, you can pay some taxes on it, but you'll have more money, right? But yeah, I mean, if you're wanting to contribute to charity anyway, I think a donor advised fund is an excellent way to do it. So. Rob, do your homework. Waymo is a dead end. Tesla's approach will crush them. Well, yeah, I don't know. I think Tesla's approach is effectively to basically use cameras. Elon's idea is, we use cameras, our eyes, to navigate the world, and why can't robots and cars do the exact same thing? And with AI, maybe they can, right? I mean, and of course Tesla, I mean, in terms of data, I mean, my goodness, it's just, the amount of data they're getting from all their cars on the street. But, Waymo's still doing pretty good. Okay. I should say they're doing well, not good. Mom, I'm sorry if you're listening. Oh, we got more. You guys are hating on Waymo. All right. Robert says, are you familiar with eMoney and how would it fit in with other apps you've reviewed? I am familiar with it. A couple of things. Its user interface is not great. I think Projection Lab is much better. Boldin is much better. Income Lab is much better. But the other thing is eMoney is designed for advisors. And that's primarily, I've used it through Mark Zorel, who uses eMoney. And like, I think all of the planning software that's designed for advisors, if you think about Projection Lab or Wealth Trace or Boldin or Maxify or Prelana, they're designed for us. I mean, some of them have versions for advisors, but they were really built for consumers. But eMoney, Right Capital, Income Lab, those sorts of tools were designed for advisors. And the reason I mention that is because you won't have total control of all of the features. Some of them, if you want things changed, you'll have to call up the advisor you have that you're using for access to the tool to make those changes. You won't have total control. And so that always kind of drives me crazy. Do Tim Cook and Bill Gates play chess? Maybe, although I would, another game that a lot of these folks, Warren Buffett plays is bridge. I would love to play bridge, but I don't play bridge. I've played a few times, but I don't, all the bidding, I wouldn't remember a thing. Paul, you're not giving me any hope. I have 4 pairs of progressives and none work with computers. Kyle, welcome to the show. All right. All of you guys are telling me not to get progressives. Yeah, I'm going to talk to them about it. Maybe I'll just end up using these for when I'm working, of course, I'm closer to a monitor than I am when I'm sitting here doing a video. Oh, here's interesting. Now, here's some hope. Now, this is the kind of comment I want to see from you people. HB Burlingame says, I've been work from home. At first, I thought he was cursing at me, but no, it's work from home. Since COVID, I got my optometrist to write me a prescription for glasses that have a focal point to my monitors. I measured. I wear them just at the computer. Thank you. It's good advice. All right. Well, here's another one. Daniel, ask him about computer glasses. Another helpful comment. Like it. Okay. Lisa wore progressives and then went back to single vision lenses for computer work. I may end up there. I do have progressives that are even older. These are not actually that old. These are just a year or two. Actually, these I think I got last year. The progressives I have are old, and my vision hasn't changed really that much. And but I didn't like those, so I may not end up with progressives. Have I ever looked at investing in, I guess, Tontine? I don't know how to pronounce it, but it's where you sort of pull money together and then it's kind of like an annuity in a sense. I don't even know where I'd invest in them. I always used to think that they're big in Europe, but the short answer is no. I know what they are, but I've not. No. I was thinking about retirement planning. So tell me if this analogy is silly. But retirement planning, I've concluded, is imagine we were going to run in a race, all of us. We're all going to get out there. We're at the starting line. It's a cool, brisk Saturday morning. Maybe we've even got those numbers that they pin on your T-shirt or whatever. And we're at the line. We're ready to go. And we realize we don't know how long this race is. So we wait a minute. We stop the race. We wait a minute. We talk to the director of the race. How far are we running? And they say, well, yeah, we don't have an answer for that. You're just going to start running. And well, okay, well, how? All right. Well, how will we know when the race is over? Well, we'll let you know when you can stop. Okay, that's different. So we're all just going to run, and when you tell us to stop, we'll stop. Well, not exactly. We'll tell you individually. Wait a minute. So you're telling me we're not all going to run the same distance? Oh, absolutely. That's right. Some of you won't get past 100 yards. We'll tap you and say, okay, tap you on the shoulder, wave you down, you're done. Some of you are going to run 50 miles. That doesn't make any sense. First of all, how do we know how fast to run? Well, that's up to you, but here are the rules. You want to run as fast as you can, and you can't stop moving. If you just get too tired and you collapse, you're out. You're done. That's retirement planning. We have no idea how long this race is going to last. We want to spend, I'll say generally, as much as we can. But we don't know how long we need our money to last, right? And you could imagine we could take this analogy even further. You could imagine someone saying, well, I think I can help you because, they run this race every year. And I went back and looked at every race that's been run since 1926. And if you just go at 4-mile-an-hour pace, you are guaranteed to be able to run at least 30 miles. Now, there's no guarantee that the race for you will end at the 30-mile marker. Maybe you have to run longer. In many cases, by the way, you'd be fine. You could run 50 miles. But the reality is most people won't have to run that far. But it's kind of risky because you might have to. And it'll turn out for a lot of you that if you run at 4 miles an hour, you could have run a lot faster. Anyway, that's retirement planning. Running a race, you have no idea how long it is. And yeah, I don't know. I think about these things during the day. Don't ask me why. All right. Will the Fed cut the rate? 30% say yes. 27% say no. 11 of you hope it does, but 32% hope that it doesn't cut rates. I'm not convinced it should. I don't think we have inflation under control. I know there's the dual mandate, also employment. I don't know. All right. Did Ray Dalio write a book on that kind of fourth turning-ish vibe to it? I'm just going to say this. He's obviously been an incredibly successful investor. But the more I listen to him and I have his books. In fact, I know I have some on my shelf somewhere back there. Oh, here's one right here. Principles. He doesn't make a lick of sense to me. I'm just going to say it. I don't know. His ideas are kind of different. Maybe I'm just not smart enough to grasp them. Dan wants me to get occupational trifocals. I didn't even know those existed. Huh. Okay. Let's see. So Jeff says that Morningstar recommends no more than 40% allocation to stock. Here's the thing about that, Jeff. And you're right. And I've done some videos on the study. But it depends on your allocation, right? If you have a good chunk in international, a good chunk in small cap, I'm not so sure that an allocation at 40% necessarily makes sense, even if you're sort of super focused on valuations, because the valuations in those sectors are not, the crazy high valuations that we're seeing with the large cap companies. But what do I know? All right. I'm not making that kind of big dramatic change to our asset allocation. Jack wants to know what I'm targeting for my major asset allocation. So I generally keep in the 70% range for stocks. Probably right at 70% now. But it fluctuates between 70 and 75. I'm not usually rebalancing down to the penny. I don't have a set allocation to international, but I know that it's lower than I want it to be. And so I'm going to be increasing the allocation. It's probably now around 16%, I would say, because the U.S. stocks, international has actually done really well this year, maybe even outperformed. But Apple, just with my portfolio, international, U.S. is just so outperformed. It's sort of brought the international exposure down, and I want to correct that. And I'm just looking at it now. Geography. Yeah. So North America, it's about, well, that's interesting. It's about 20%. So that's not terrible. I'm okay with that, but I'd like it to be a little higher. So, yeah. IB wants to know if I consider Berkshire an individual stock. I do. I understand it kind of functions like a large cap mutual fund, right? Because it's so well diversified. So in that sense, I don't see it as in the same light as I would Apple. Apple is a much, much more concentrated investment than Berkshire. Berkshire is much, much more diversified, both in the stocks that it owns as well as the operating companies. So I'll continue. If I were going to add to a stock today, it would probably be Berkshire. Although interestingly, Warren Buffett, I don't know who's making the decisions now. It could, and I think they sort of divided the portfolio up too. So I don't know how much of it Greg Abel handles now. He's taking over for Warren Buffett. But in any event, they haven't been buying Berkshire Hathaway stock back, which they would be doing if they viewed it as undervalued. At least I think they would. All right. So Nick wants to know if I do tax loss harvesting. I have in the past. I haven't recently because I don't have any losses. So I guess that's a good problem to have. I don't have any losses to harvest. So, but I would, sure. The last time I did it was, let's see, actually, when I was buying that Apple stock, in end of 2018, beginning of 2019, market was down end of 2018, and I sold a small cap fund, an international fund, and I guess a U.S. fund that I had invested in at the beginning of 2018. They had losses. I sold them and harvested those losses, but I don't have any losses. So I don't have any tax losses to harvest. Let's see. This is interesting. So Jonathan says that large language models are not real intelligence, and that's true. It's basically predicting the next word, right? But I wonder how much that matters. I mean, in other words, and I use AI a fair amount in my business and just research, and it's incredible what it can do. You take like where I was showing you where it was doing that stock intersection that Morningstar does, but it was doing it for us. Do I care that it's not real intelligence? It gave me the right answer. What do I care, right? It's kind of like a calculator. Calculator is not real intelligence, but it gives me the right answer. So I hear you. I just don't know how much it matters. Now, maybe if you're trying to get to some, whatever they're calling super intelligence or whatever, maybe it matters at some point. Am I selling SCHD or VTINX? No, I haven't sold any of that. VTINX, no reason to sell it. The only reason I would sell VTINX is if I needed to change my overall asset allocation. And if I did that, it would just go to a different target date fund to get the right asset allocation, but I don't need to do that. SCHD, I've never owned much of it to begin with. It's in the Roth accounts, and I bought it because it's a value fund. And I haven't sold it. And I don't think it's done well this year. I think it's flat, basically. Let's see. Here we go. Year to date. Yeah, it's off 1% year to date. So it's not done well, but no, I haven't sold it. Alex wants to know my thoughts on Vanguard versus dimensional funds. Well, I love Vanguard index funds. I think they're, some of the best available. With dimensional funds, and more of these will become available as ETFs. They have some as ETFs now. You can certainly get different types of exposure with dimensional funds. It's been a long time since I've gone in and dug into their funds. I can remember when I read Rick Ferry's All About Asset Allocation, was all into it. And I was so upset. Back then, they didn't have ETFs, and you needed to go through an advisor to buy their mutual funds, and I just wasn't going to pay the fees. And I was all upset that I couldn't buy some of their funds, and I was really focused on value, international, small cap value, and all that sort of thing. Today, I don't really care about that. I'm just fine with sort of covering the market, so I don't have as much interest in that. But I think dimensional funds are good funds. I just have not spent much time in recent, meaning the last couple of decades, focused on their funds. Let's see. So how do you pronounce XI? Xi? I'm not sure. A friend recently showed me Origin AI, an SEC-regulated financial advisor. I was wondering if you've tried it out, and if so, how accurate and effective it was. So I've tried Origin, and they're an affiliate. I don't know that I've talked a lot about them on the YouTube channel, but on my website, Origin is. Let me see if I can pull it up. I have a demo account, but let me see if I don't know if I can log into it from this computer. Let me try. I don't know if I can. I'm bummed that I can't. Let me try one thing. Yeah, I can't, unfortunately. Well, in any event, I have used it. So it's a budgeting app. It can track your investments. Actually, I did mention it in the video on alternatives to Empower. I mentioned that Origin is maybe arguably one of the closest alternatives to Empower. Empower is hard to beat because it has a solid retirement planner. I think its investment tracking is excellent, and it has a decent expense tracker. It's hard to find that combination in a single app. Origin doesn't really have a retirement planner. You can talk to a CFP and go that route. It's not that expensive. But their investment tracking is good, and their budgeting features are as good or better than Empower. So, it's kind of depends on what's most important to you. Right now, you can get Origin for $1 for the first year. And then I think it's $99 a year. I have tried their AI a bit, but not enough to really have an opinion. But I'll work on that, maybe do a video on it. All right. Can Indiana beat Ohio in your independent view? Absolutely. Although we should be clear, it's the Ohio State University. I'm just saying. I've watched a couple of games that Indiana's played. Their quarterback is excellent. They have 2 receivers. I don't know their names, but I think they're really, really good. Are they Jeremiah Smith and Carnell Tate? I don't know. By the way, those are 2 receivers for the Buckeyes. Maybe not, but they've got a running back. Is his name Hempy? What's his name? Hope I haven't. Hemby. Is that right? Yeah, Roman Hemby. I mean, I don't know what his stats are, but he just looks incredible. Like he could just run over anybody. And so, yeah, I absolutely think India. I think if it'll be interesting because, Ohio State doesn't play Indiana a lot. And they, and this year Indiana is really, ranked number 2, and they don't play each other during the regular season. So they'll only play each other if they both make the Big Ten championship. And so it's a little hard to predict. But I would assume it's going to be a really good game. I think it could go either way. And I guess this helps Indiana. You know where they play the Big Ten championship? Indianapolis. Of course, it's not that far from Columbus. All right. Fishy wants to know if this is decaf or regular. It's actually regular. It's an Americano. Believe it or not, I can drink coffee and go right to bed. I don't normally drink coffee this late. Let's see. It's actually easier. The distance for the screen, it's easier for me not to wear these things. All right. Hopscotch wants to know, how do you get alignment with your overall retirement planning with your spouse? My wife is happy to delegate those tasks to me, but I want her to be aligned despite her not showing interest. I just don't think we've encountered any issues where alignment was an issue. I do wish she were more interested in like our investments, just so she understood kind of what's what. But she just kind of leaves it to me. So hopefully I'm not making any mistakes. Yeah, we just haven't had that issue. I don't know what to tell you. All right. I've now gotten to the part of the chat where you guys are guessing the chess move. I don't know. Did anyone say rook takes knight? All right. You get to a point when you're studying these games, like you just you picture it in your head. Like I can just sit here and tell you, E4, E5, knight F3, knight C6, bishop C4, bishop C5, C3, D6, D4, ED, CD, bishop B4 check, knight C3. You just sort of, I don't know, it gets ingrained in your brain. It's probably not a good thing. All right. Let's see here. Here we go. I would retreat the bishop. Attacking the knight would lead to losing the bishop anyway. There are other good moves in that position, by the way, but I think rook takes knight is the best. All right. Here's an interesting question from Jules. Does it make sense to pay a financial advisor 1% of your portfolio versus self-managing with AI assist? I would personally ask a different question. I would say, does it make sense to pay a financial advisor 1% of your portfolio versus hiring someone else for just a fee? They have advice only advisors where they'll look at your portfolio, give you advice, even walk you through, here's what you should buy. That's kind of how Mark Zorro works, who I've talked about on the show in the past. I wouldn't personally compare a financial advisor with AI at this point. AI can do a lot. If you're already comfortable as a do-it-yourself investor, AI I think can be a good assistant, research assistant, analysis, that sort of thing. But if you're not comfortable as a do-it-yourself investor, I don't think AI, at least at this point, is going to bridge that gap for you. So I would, but I would seek out someone that could advise me on a flat fee basis rather than an AUM basis. That's my take anyway. What is the free program you had recommended to estimate tax liability? It was eFile. So eFile, so this computer is closer, so the glasses help. eFile 2025 tax calculator. If you just Google that, you should find it. Here's what it looks like. It's right here. And it's pretty detailed. Yeah. So there you go. HT wants advice on how not to look at stock prices every day. Do you look at the stock prices every day? I'm trying to beat this habit, especially during this volatile time. It's funny because I don't really view this as volatile. Has it been that volatile? I don't know. I tend to look every day just because I'm interested in it. Sometimes I won't look at my balances. It's like I see the market's down 3%. It's a bad day. I might not look at my balances. Although at this point for me, it doesn't really matter. But there were certainly times when I would when the market was down a lot, I just wouldn't look. But, partly it's because of what I do. I'm YouTube videos. I'm, just in front of a computer a lot. It's kind of hard not to see what the market's doing. I'm just reading financial news a lot. But yeah, you could just, turn off the computer, try to get away from it, try to get, put down your phone, take the stock app off your phone if it's if it's a problem for you. But it's not easy. Yeah. I wish I had some, excellent tip that could just solve it, but okay. Let's see. Dan says Tesla will solve auto driving in 2 weeks. All right, what do we got? What time is it? 8:15. Okay. Josh wants to know if I've used the eFile calculator to sort of look at Roth conversions. I haven't. I have used it to just see what my tax picture will be like this year. But I already know what brackets I'll be in. I don't really need a calculator to determine the consequences of a Roth conversion. In some cases, you might, right? Because you could lose out on maybe you're getting ACA credits or different new deductions in the new tax law. But in my case, it wasn't that difficult to sort of figure that out. So let's see. Peter says he took a Waymo ride. It was fun, felt safe. He's scared of Tesla's full self-driving. I actually want to buy a Tesla because of its self-driving capabilities. Even just get a used one. I haven't done it yet. I talk about it. Probably drive my family crazy. Although, if other cars, if other electric vehicles had full self-driving, I probably wouldn't get a Tesla. There are other electric car companies, Lucid, Rivian, that I find a little more appealing. But for now, I just drive a Honda Odyssey. All right. Todd wants to know if I'll do an origin review soon. I have a question for you guys. I'm going to end the poll. So will they cut the Fed rate? 35% say yes, 28% say no, 10% hope they don't, or hope it does, 27% hope it doesn't. Here's my question for you. Should I do individual app reviews? So, I've done reviews on like Boldin and Projection Lab and Maxify and retirement planning software. But what about, I'll say, individual budget and I'll just say individual budget app reviews. So I did one on Monarch. Should I do one on Origin? Should I do one on Simplify, Rocket Money? I don't know. Pick your app. Lunch Money is another cool one. And I'll just say yes, no, or I don't care. Those are your options. How much of gross income do you recommend couples invest towards retirement? Dave Ramsey's 15%, the money guys are 25%. I think, personally, I think rules of thumb in this regard are probably not that useful because a lot of it just depends on what your goals are. When do you want to retire? The way I started thinking about investing eventually was not I'm investing for retirement, but rather I'm investing for my financial freedom, which for us and in my thinking was much closer than retirement. And so we wanted to save as much as we could. I couldn't tell you what percentage we were saving. It probably varied from year to year. But that's how I thought about it. It wasn't for retirement, when I'm 65 or whatever. It was for financial freedom. And I'll tell you a story. I was working one of my jobs. I was in a very difficult phone call. A lot of people were on the call, including the head of this of the place where I was working. You can tell I'm being very vague. And he was having a very sharp conversation with another employee who was calling in from a different office. And I thought he was completely out of line in the way he was talking to this person. And I remember at the time thinking, So I couldn't retire. I didn't have enough money just to retire, but we'd achieved a fair amount of financial freedom, and I could quit that job without another job, and we'd be okay. I mean, I'd have to find another job, but we'd have plenty of time. And it kind of hit me that that's financial freedom. So this, it's money that we have saved and invested. I don't have any plans to spend it. I may never spend it. Who knows? But it's having a real world impact on my life, because it's given me the freedom that if I want to, now he wasn't directing this at me, but at that point, the writing on the wall, I saw it. I saw, I'm gone. It was so bad. I'm leaving. I'm not going to stay here. And, but I knew I could just walk out if I wanted to. And that's real financial freedom. So that's how I think about it. I don't think about it in terms of retirement. And I did leave that job. I don't remember how long after that. It wasn't like the next day, but within the year. And got probably the best job I've ever had, or certainly one of them. So, but that to me is financial freedom. That's how I think about it. And I want to get to that point as quickly as I can. Again, it's not even the ability to retire. I mean, hopefully we eventually get to that point, right? But to me, that was almost secondary. And really, I've got my book. Oh, here it is. That's really what this book's about. The book that I wrote, Retire Before Mom and Dad. This is really about, it's called Retire Before Mom and Dad. It's really about financial freedom and my thinking on all of that. All right. A lot of you have computer glasses. So I can't imagine wearing, have progressive lenses that have 3 distance. Oh, okay. I was thinking contacts when I read that. I can't do contacts. Okay. But 3, a trifocal, maybe, I don't know. What did you guys say on the reviews? 40% said yes, 21% said no, and 39% you don't care. Well, maybe I'll do a few of those. I think this is in reference to the race. Why not walk? Well, the speed at which we go is sort of related to how much money we spend. So yeah, you could walk. You could spend very little. In effect, that's the 4% rule, right? That's spending very little, at least based on historical standards. So you absolutely could walk. It's absolutely one way to deal with the uncertainty. Spend very little. Yeah. If you think about the different options, someone could say, I tell you what, I've got some special running shoes you can wear. And when you put them on, it guarantees that you'll never stop. Your race could be 70 miles long. You will never stop. That's the good news. But there's some downsides. One is, once you put them on, there's no returning them. So if your race is only 100 feet, you're done and the shoes are gone. You can't leave them to your loved ones. The shoes are gone. And every mile you run, you'll run a little slower the next mile and a little slower. What am I describing? An annuity, right? This whole race thing, I'm telling you, it's got a lot of mileage. No pun intended. I think I could really, we could model a tips ladder in a race analogy. Not a problem. You guys have probably all signed off. You're like, this guy he's lost his mind. Let's see here. How are we doing on time? Well, we only got 5 minutes. We can do another chess puzzle. I can show you some games that I've played terrible and lost, and it's been embarrassing. Randy says the question I asked was too restrictive. He's done it all. He's bought, he's sold, he's rebalanced, and done Roth conversions. Sounds exhausting. Well, yeah, I guess sometimes we have to do it all, don't we? Okay. Did you hold the thing, hold Michael Burry, where he, of course, he shut down his hedge fund because stocks are too expensive, which I guess in some ways I respect. But then I think, can you imagine if Warren Buffett did that? It's going to shut down Berkshire because valuations are too expensive. I know it's not a hedge fund. He shorted, or maybe he bought puts, I guess is what he did, on Palantir. Am I pronouncing that right? And I think a little bit on NVIDIA. And I always find shorting or buying puts, they say economists should predict what or when, but never both. But when you're shorting a stock or buying puts, you're kind of doing both, right? And there's a time limit. Now, I think the puts he bought, I don't think expired till 27. I may have that wrong, but they were priced at like $50, and this is for Palantir. Is it Palantir? I don't know. But I know the CEO kind of went bonkers when this happened. It's got a PE of over 1,700. I mean, in what world does that make sense? Anyway. Randy says, I don't know if I understand all this. He's 69.5. Allocation is 72.5%, I guess, stocks, with action limits at 70 to 85. So I guess he sells at 70. I don't know. International 70-30. Too risky? So it's a great question. There's no way for me to answer that. There's too many things I need to know that I don't know. Like, how much of it are you spending every year? What are your other sources of income? How much of that do you need just for living expenses versus discretionary spending? I mean, one way to look at it is to say, with that kind of allocation, how much could you lose? At least based on historical standards. Obviously, we could go back to the Great Depression and stocks were down 90%. That's unlikely, I guess, not impossible. But I think, someone that's your age, let's just say you live to be 95. So that's 25 years. Yeah. There will be periods of time in that 25 years where stocks are down probably 50%, right? I mean, you look back in time, that's what happens. So you can evaluate for yourself, well, what would that look like in my portfolio? What would that do to our finances? How would we weather that storm? Now, in the past, it's always come back. I can't tell you, what the future holds, but generally an allocation of 72.5%. I mean, mine's 70, and I'm younger than you are, meaning, at least in theory, I have a longer time to have to fund my retirement. So in and of itself, I don't think an allocation. You're not navigating in Apple Maps. Why is my watch talking to me? Just in absolute terms, I don't think a 70 or 72.5% allocation is necessarily too risky. But to get to to evaluate it specific to an individual, there's just so much more that you need to know, right? All right. Jamie, Rob with the low-key flex. I don't have any tax losses to harvest. It's true. When you buy and hold for a long enough time, that's the thing with why I'm not a fan of direct indexing. Unless you're contributing a lot every year, eventually you won't have any losses to take, right? I mean, eventually. And it doesn't have, and in fact, studies show that it's usually after about 5 years, your losses really dwindle. All right. I guess we're bringing this show to a close. When's the next live show? I guess I should look at my calendar because we have holidays coming up. I guess we'll do one on the 1st of December. Lord willing and the creek don't rise. That's 2 weeks from now. I'll probably do one on the 15th as well. And then probably not until January 5th. Take the holidays off. So that's the plan. Let's just see if I've got anything else here. Bob points out that a Honda Odyssey is very functional, practical. Absolutely. Not stylish, really. You're driving a box down the road, but It's a people mover. I actually ordered a Tesla. This was in 21, and you couldn't get one. There were no used Teslas available. I was going to get the Model X, and I kept waiting and waiting and wait. I mean, they kept delaying it and delaying it and delaying it. We had, our granddaughter was here, which was the reason I got the car. Before then, we only had one car, and I just said I can't wait. So I called up a dealer, Honda dealer. I knew exactly what I wanted, and I said, "Can you deliver it to my house?" I hate going into dealerships. So the guy brought it to the house. I signed the paperwork in our dining room, and he took an Uber back to the dealership. That's how you buy a car. All right. I don't know why I'm getting off on all this nonsense. Let's see here. I guess that's the end of the show. Yeah. Well, it is 8:31, so it's time to go watch Monday Night Football. I appreciate you all joining the show. It means a lot to me. Hopefully, I said something that could be useful. Who knows? But I hope you have a great week. And until next time, remember,